The 19th one. This is nothing new, it's just information. Like we read it for you. Unit 19 is related reporting topics. This you can say the end of the auditing discussion. That's why we will discuss the interim financial information, which is obviously not subject to audit. Letter for the underwriter and certain other requesting parties, which is to be issued by the auditor. And filings under federal security statutes, means the compliance part of that one. Other information in documents containing audited financial statements. Then required supplementary information. Supplementary information in the relation to the financial statement as a whole. So, scope of our discussion is the things other than a normal audit terminologies. Reporting on condensed financial statements and selected financial data. It means not to report on the full set of financial statements, just the condensed form should give some assurance. Reporting on financial statements prepared for use in other countries. Suppose if you are based in US, you are making it for the other countries. Then reports on the application of the accounting principles. Engagement to apply, this is we know, already we have so many times, compliance, auditing standards, JAS. Engagement to apply agreed upon procedure. This is also we know, this is just a revision. Financial forecasts and projections are being made internally. And the auditor sometimes review it, what other formalities we have to do. Reporting on pro forma financial information. Pro forma, as we know, is pre-printed financial statements. So what is the reporting? And compliance attestations. Now let's start our discussion with interim financial information. Interim financial information, generally these are for not for a full period of year. This is interimly, maybe a quarter or so. And this is interim financial statement, IFI. It may be in the statement form and it may be in the condensed form. Depends what is the usage, what is the utility out of that. And it is ready to conform with the applicable financial reporting framework, maybe a GAAP, IFRS or other oversight bodies for that. The objective of review of IFI is to enable the accountant to provide negative assurance, to state whether he is aware of any material modification needed for this one. So it's the sort of purpose is negative assurance, so he can express his opinion about material misstatements. Then the understanding should be documented and the objectives should define what are the limitations and responsibilities should be clear. Before acceptance of an engagement, the auditor or accountant must see the ability to acknowledge responsibility for the sufficiency of the controls. Then he has to see the management responsibility. Typically, as we know, is engagement letter that we define the scope of the transactions. Now, analytical procedures will be applied and we can inquire the other formalities and procedures. For that, management about financial and accounting matters and non-accounting matters, non-financial matters can also be asked. Then you can see the litigations, claim and assessments and any going concern issues are there. And you can see that if there is some need to extend the procedures. This is all is the standard. Then for communication, we can see any discussion on the quality of the entity accounting principles required with the management that we can do. Independent accountant review report. We have reviewed the accompanying interim financial information. And this is for the 3 months and 9 months period then ended. These financial statements are the responsibility of the company management. This is, we know, all preparation of the financial statements is always the responsibility of the management. Auditor responsibility is to get the sufficient evidence to express an opinion, to check the test of controls according to the Sarbanes-Oxley requirements and the test of controls. Each page of IFL must be clearly marked as unaudited. Now let's discuss the comfort letter. This is for underwriters and the other requirements, other bodies, they require letters from the auditors. So in conjunction with audit, they may be issue comfort letters for the underwriter and certain other requesting parties. Now, when a party with due diligence defense requests a comfort letter, but do not furnish a representation letter, the accountant may not provide negative assurance but may describe procedure performed. What is the date, what is the address, who is the addressee, independence is required, and compliance with SEC requirements, and the standard audit reports, these are the things. Unaudited condensed interim financial statements, as we know that this is requiring the negative assurance.
So the quarterly financials will be...
Yeah, will be here. This is interim financials. Knowledge of internal control is very important. This is for any kind of either say interim engagement or a final engagement. Auditor must know what is the nature of the business, how it works, what is the test of controls they have to, what is the control procedure. Then capsule financial information is unaudited, summarized interim financial information for the subsequent period, used to supplement the audited financial statement or unaudited condensed in a registration statement. This is also again a negative assurance because we are looking for some material statement opinion. Performa financial statements are the same. The accountant should not comment on this information unless they have acquired the appropriate level of knowledge. Forecast also, future forecast, budgetings, these are also to apply agreed upon procedure to a forecast. The accountant must perform compilation procedure that we just discussed, that how to check the accuracy. For management decision analysis, that is shortly called MDA, comments, you have to see that the management discussion analysis may be made. No comments on the compliance with the form required by SEC should be made. Furthermore, no comment should be made on non-financial data in the MDA. So auditor has nothing to do with the exam on financial in terms of opinion of the auditor.
In forecast, what auditor will check? I mean, budget,
he will check the same as he checked in the compilation. Like we just discussed that compilation is for, and there are some standard paragraphs into, he checked the test of controls, he checked everything. Because, when we are talking about forecast, it is maybe 1 year, 5 years, 10 years forecast. And in forecast, you have to make the financial statements. So and how validate, how they will get the validation for example, the sale forecast. Depend upon their preceding knowledge with the entity. And for the future knowledge, he has to check the board resolutions and the adequacy of the, the analytical procedure by applying the previous year's sales in the next year's sales, applying different ratios, and for that he can use the detailed testing for forecast is not recommended. Generally, the analytical procedures link the variables is very important. So the same procedure he has to see, and he has to get the sufficient audit evidence. That is, one is majorly from management representations, and other is already, if he is not the core auditor, then he will discuss with the preceding auditors and he will try to get the audit evidences, sufficiency, any risk of material misstatements are there, how management is tuned to the recommendations raised by the auditor and how they incorporate in the financial statements. This is a big scope in terms of forecast. Subsequent changes, they have to see whether it's there, and for that we have to read the minutes and make inquiries, board resolutions, will define what are the significant changes has been done. Table, statistics and other information is having the same scope. Concluding paragraphs can be added. The concluding letter should include that the paragraph stating that the letter is solely for of the address. I mean, it's a specific purpose letter for a specific body. It's not a public letter like a financial statement is for the user and the viewers. Counter responsibility is only similar to that for the other type of reporting, but the statute specifies responsibilities in detail. And let's discuss this one. This is the summary that we are going to discuss in next sessions. 550, 558, 551 and 552. We are going to discuss the type of informations, accountant procedure and the reporting responsibilities. If you see that the other CEO letter included in the annual report, read for consistency and the financial statements, and responsibilities to add a paragraph. So this is a shortcut to keep in mind. For supplementary oil and gas reserve information, you may apply limited procedures and add paragraphs to the audit report. For supplementary in relation to the stated schedule of the fixed asset, you have to do the audit and you have to refer to and report on the fair presentation on the audit report. Condense or selected summary of the financial results, condense or you can say projected financials, interims, determine whether stated fairly relative to the complete financial statements in a separate report. You have to issue a separate report for that. Refer to the audit report and the state conclusion